Hello, everyone. My name is Mark Noble, Senior Vice President of ETF Strategy at Horizons Exchange Traded Funds, and welcome to today's webinar on cannabis industry investing in marijuana. Clearly a hot topic right now, and we're excited to have you here today as we talk about some of the key investment opportunities in marijuana investing. Before we get started, though, I'd like to go over a few items so you know how to participate in this webinar. First of all, even if this is a recorded webinar, that doesn't mean that I don't want you to ask those pertinent questions. We go out of our way to collect questions, and we'll get back to you usually within a 24-hour period. So if you have a question on today's presentation, you can type your question into the questions pane of the control panel, and at any time we will collect these and address them within 24 hours of receiving them. You'll also notice on the right sidebar that we have a lot of presentation materials and resources available for you. That includes a presentation, a product lineup, as well as product sheets on both of our marijuana-focused ETFs, HMJ and HMJR. Please also note that this call is recorded, so you are free to listen to the content at any time, and it's also will be available for future use on our website at www.horizonsetfs.com/marijuana. So the day has finally arrived. Marijuana usage is completely legal in Canada. Now, you may be envisioning us being in a cloud of smoke here today, but I assure you we're quite lucid as we talk about this exciting development. No, but as we've gotten ever closer to this date, we've had many investors asking us, what does this mean for marijuana investing now that we've actually hit this crucial day for October 17th? Now, is it the end of the rally in marijuana stocks, or is it the beginning of something new? I think legalization day in Canada probably presents more questions than answers, and our goal today is really to try to address how to navigate the marijuana investing landscape using ETFs in this post-recreational marketplace. So with more than $1 billion in assets under management in the Horizons Marijuana Life Sciences ETFs and its companion ETF, the Horizons Emerging Marijuana Growers Index ETF, which trades on Equitas Neo under the ticker HMJR, Horizons ETFs is amongst the world's largest investors in marijuana equities. But I think what's very different from us and other commentators in the market is, we come from this from a slightly different perspective than other asset managers, and that our ETFs are index strategies. We don't actually pick the stocks in the ETFs. We track indices. And I think by doing this, it makes that we're really focused on the sector outlook rather than who the winners or losers are going to be within the sector. There tends to be a lot of noise on, is this stock better than this stock? And our view is it doesn't really matter. We're providing diversified exposure, so we focus on the sector. And really, when it comes to sector experts and people that are pioneers in investing in the space, we're joined by one of the best out there, which is our president and CEO, Steve Hawkins. And Steve is going to present on where the opportunities are in marijuana ETF going forward. And he'll also address some of the long-term opportunities, and as well as some of the challenges in this sector we might face as we actually start to see real revenues from the recreational marijuana sales come to the forefront. Thanks again for being with us today, Steve.
Mark, thank you very much for having me.
So quickly going to go over the agenda here. We've got the opportunity in marijuana investing, and obviously Canada plays a key role, so we'll talk about the Canadian advantage. You're going to hit the key drivers of growth and some of the challenges, and then I think we'll talk about some of the pretty neat features we have with our two ETFs. So without further ado, Steve, I'll pass it over to you.
Thanks a lot, Mark, and I'll try and keep the shameless plugs to a minimum here and really try and talk about the cannabis sector itself, but I'm a sales guy, so I really can't help myself sometimes. So please ask questions, though. As Mark said, we're very, very prompt about responding to things. With respect to just the marijuana information that is out there in the marketplace, you cannot go through a day without listening to the news, without reading the newspaper to hear about what is going on with a cannabis stock or multiple cannabis stocks or the cannabis sector. It is extremely newsworthy from a day-to-day perspective. And what is that doing? That is driving investors into investing in marijuana, asking questions about why should I invest in marijuana, or have I missed the train and should I be wanting to continue to invest in marijuana? Is there more potential upside? So here at Horizons, as Mark said, we offer products that will allow you to get exposure to the space without really having to fully understand what is going on with the individual companies out there, because the ETF marketplace is really all about providing broad, diversified exposure at a low cost to you to get you access to something that you want to invest in for whatever reason. Could it be for investment purposes, for your, how you practice your lifestyle, for you see trends changing from a social perspective. Here we have a significant governmental change, as Mark said. And so today is a fantastic day for marijuana users who now could go out of their way and use the product however they see fit, in whatever manner they see fit, and without driving, of course. Please, we see significant opportunities to come out of that with respect to Canada. So moving along with respect to why should we be investing in marijuana, the recreational use on top of the medical use, which we've seen significant ramp up from a usage perspective over the past 3 years, has been really, really well received. We see the optics of what's going on in the Colorados and the Californias as examples for what's going to happen here in Canada with this recreational opportunity. We see the North American market reaching, 25 billion USD in sales. That is a significant amount of tax revenue that's going to the governments. And that's why we see the states, more and more states in the US legalizing it from a recreational perspective. But we also see Canada now fully recreationally approved. So we see the different provinces looking at the different revenues that they can make from a sales tax perspective. We see the government looking at the additional revenues that they can make from both the profitability of the companies that are now turning, new and distinct profits from different traditional bricks and mortar companies, as well as the government sales tax. We can't get away from GST and HST wherever you're situated in Canada. So, sales taxes providing a benefit to the governments. We see that significant benefit in the Colorado and California spaces. So we see that going to be transitioning to Canada very, very soon. In Canada alone, through different provinces, we see recreational sales, expected to be at least 4.3 billion next year. Some analyst forecasts we're seeing it up towards 7 or 8 billion from a marijuana usage perspective. So, there is significant sales opportunity. These companies that are coming into this space are licensed producers. They have bricks and mortar operations. And what they're doing is they're creating product, they're growing product for use by our people in Canada. And that is, that is no different than Crest creating toothpaste. And, our liquor companies selling beer and vodka out there to the growing public. So cannabis is here to stay as of now, and we're going to see what's going to happen from that perspective. Specifically in Canada, medical marijuana has been approved for some time now. We've seen the usage increase over a period of time. More and more people are using medical marijuana. I like to give the example of, a close family relative who hates tobacco, hates sales, but has been a chronic pain person for a very, very long time, been significant usage of opioids. And now, for the past year, she has been actively using cannabis. And she started with cannabis oils. She started with other cannabis-infused products. Now she's taking a milkshake every day to help her appease her chronic pain issues. And this is all without having to take opioids. And, we would much prefer to see people in Canada not being hooked on opioids and other narcotics when they can be taking cannabis, which doesn't have any long-standing legal physical implications with respect to addiction, as far as we know. The recreational approval now, which is legal on a nationwide basis, still has individual province laws with respect to distribution. So we're not sure how and well it's going to be distributed in each province right now, and we're not sure how the cannabis producers are going to be able to meet the demand that we think is out there in the marketplace. They already believe that their supply is well under the demand requirements. So the Canadian medical marijuana producers who have been ramping up production to be able to meet the recreational demand continue to fall short from their belief of how much marijuana they need to produce to be able to meet the demands that are happening here in Canada. So
that's kind of a key point, isn't it, Steve? I mean, when you look at the medical marijuana framework in Canada, I think one of the things the provinces have really done is they've defaulted to the ACPMR licensing setup that the government has set up, and they're really looking to those already medically approved companies to be distributing, which creates some of these shortfalls you're talking about, right?
Yeah, so I mean, although individuals can grow a certain amount of marijuana themselves, we believe that the significant amount of marijuana that is going to come into the marketplace is going to be from the companies that already have established operations, that have already established product controls, are using the correct pesticides with respect to how to grow their marijuana. So people are going to be going to name brands, from our perspective, to go after the marijuana. And these established medical producers out there have really a strong foothold with respect to that. Brand recognition is going to be very, very important with respect to the growth of the marijuana industry in Canada specifically. So we're very, very optimistic of what's going to be happening on a going forward basis. You know, because of the recreational approval now, we're actually going to start to see next year, maybe the end of this year, but likely in early next year, we're actually going to start to see actual sales numbers come in for these medical marijuana producers who have really only been able to sell in Canada on a medical basis, and some exporting outside of Canada. But really, we have no idea what this recreational market entails for us from a sales perspective and where they're going to go for those sales. So it's going to be very, very interesting times here from October 17th forward for the rest of the year. Talking about medical marijuana in Canada, you know, we have licensed producers really all over the place. We have been, the number of companies that are licensed producers now has increased by almost 200% over the past 16 months. And, you know, there used to be 40 companies, very, very controlled from a governmental perspective. More and more LPs have come online. You know, every province basically has the ability to have a licensed producer in it, whether it be internal from a greenhouse perspective, or external from an above ground, outside processing place. So, you know, cultivation is going to continue to grow, but the government is still very much restricting those who can produce marijuana on a large scale basis. And that's where we really see the opportunity. Those are the companies that we're investing in. With respect to growth, quickly, you know, I talked about this a little bit before. You know, we see total cannabis sales in Canada from a medical and recreational basis over $7 billion next year. We have no idea what's going to happen the rest of this year, but you know, there's a lot of distribution issues that are going on. The company's still figuring out what's going on from an inter-province distribution policy perspective. You know, we know the provinces are now creating a little bit more of a kerfuffle on how we're actually going to be able to buy cannabis from our local distributors and who is actually going to be a local distributor. So those are all things that are going to be worked out over a little bit of time. But we think all of those issues are going to be fully resolved in a short order, and we're going to see sales significantly ramp up as we see from the predictions of 2019. You know, we also see on an outside basis, we see cannabis really growing from not just the base market of growers and people that are, you know, the normal everyday consumer that is out there right now, but we see more and more consumption opportunities available out there. You know, there's a lot of cigarette smokers in Canada, and will they stay cigarette smokers where you have a highly addictive tobacco and tobacco industry playing upon that, or will we start to see some shift to cannabis now that it can be easily acquired on an over-the-counter basis at a store right around the corner, just like your normal everyday corner mart or pharmacy. So, you know, consumption is going to increase. The number of consumers is going to increase, and that is going to be very, very good for the retail cannabis market in Canada. The other really big thing that we see coming out of this is the ancillary to cannabis market. You know, there are so many different things from a different type of cannabis and how it is going to come to market, from an infused beverage perspective, from edibles, from vapes. You know, these are all things that are going to happen to the market from an approval perspective over time now that recreational pot is here and here to stay. You know, we also have the ancillary benefits to the cannabinoid and synthetic producers out there. We see security, we see all of the different changes. There are all these growth potentials for companies that are coming into this marketplace. And HMMJ really tries to participate in all of these different types of stages of companies, whereas HMJR is really focused on the growers and the LPs. HMMJ really focuses on not just the cannabis market, but all of the ancillaries to the cannabis market. So if you're thinking about how big can the cannabis market impact from normal bricks and mortar perspective, there are a lot of different ways that we're impacting that marketplace.
It's sort of similar, I guess, it's just like the energy market, right, Steve? I mean, if you have you have the upstream producers of actually getting the energy out of the ground, oil and gas out of the ground that people know about, but you also have these very attractive revenue sources from support companies downstream, as you mentioned. I think maybe some investors tend to overlook that part of the investment decision.
Yeah, I mean, if you look at oil to gasoline, there are the companies that pump the oil out of the ground. So here you have the growers of marijuana, and then you have the people that are managing the refinement, the distilling, the transportation, the security around that before it gets to you at the gas pump. So there's a lot of different stages in between you actually the companies growing the marijuana, and then you actually being able to use the marijuana at the end. So the ancillary marketplace, there's many different pieces to the puzzle all the way along the lines. And that market is changing every single day. So there are new and changing companies as this market evolves, as there's more and more users to this marketplace. Refinement's going to change, the distilling method's going to change, how the product is packaged and delivered to you at the end of the day is going to be changed. It's going to be very exciting for us to watch what's going on in the cannabis market in Canada, now that we are the first G7 country in the world to really bring this to marketplace from a recreational approval. So just looking at it from an overall basis, breaking down Canada as we see it, I won't spend too much time here, but really, this is really sort of a population-driven type of prospect. We see that Ontario will be the single largest user of recreational. It has been the largest user of marijuana from medical purposes so far. We see the West, BC. People always think of BC as our marijuana smoking snowboarders, but it's not just that. There is significant lifestyle opportunities there, especially from a growing opportunity perspective because of the climate. So Alberta and BC really provide a significant opportunity for different growing prospects for the companies. Then we see Quebec. Things are always happening in Quebec. There's a significant population in Quebec, and we see significant usage on it going forward in Quebec. And then bringing up the rear, we have Atlantic Canada. It has a much more concentric population, but it has a much older population as well on a general basis to the rest of Canada. So, cannabis usage generally in the eldest part of our population doesn't really exist the same as it does in the 21 to 40 range of our population, which is highly focused on Ontario, out west, and Quebec. The other significant benefit to our Canadian companies is really the advantage we have from a global production, global distribution, the ability to have boots on the ground in different countries out there to make prospects with respect to bringing our growing technology to those foreign marketplaces. The Canadian companies have followed the U.S. companies from an ability to grow, from an ability to create refined recreational product. However, the American companies really are restricted to doing business only in their states. They cannot be exporting the product. Canada has export licenses and has import licenses in all of these major markets across the world. Several of the Canadian cannabis companies now have boots on the ground and growing operations in Germany and Finland and Netherlands. These are countries out there where not only is medical marijuana approved, but the prospects of you being able to buy your marijuana is so much easier. You have your drug plans for your companies covers your marijuana usage in many of these countries, which is very unusual compared to the rest of the world. Not even in Canada can you get your drugs covered, your marijuana-based drugs covered by your OHIP plan or whatever plan you're on from a province perspective. So significant opportunities from a growth perspective worldwide. We have what is called a competitive advantage over the Americans, who are right now second best when it comes to being able to hit the global expansion of the cannabis marketplace.
There's a big reason for that is because of the capital markets investment from the stocks in Canada having full support of basically our financial system.
Well, that's why we see so many American companies coming to Canada to get access to capital markets place. They can't, creating an investor database and an investor, the ability to raise capital from an investment banking perspective does not really exist in the U.S. because no major players from a banking or securities dealer perspective can really get involved in the cannabis space or backing these cannabis companies. So they're doing it from a hand-to-hand combat perspective to raise share capital. They come to the Canadian marketplace. You have all of the major banks now thinking about cannabis. You have like BMO as an example, actually financing cannabis companies. And you have all of the independent dealers leading these syndicates of capital markets raising facilities for all of the companies that are coming to Canada. I think we have almost 40 U.S. companies, cannabis-based companies, raising capital in Canada because they know here they can raise that capital, whereas in the U.S. it's extremely restrictive. We have companies now that are listing on U.S. exchanges to get access to the capital markets there. So these companies like Aphria and Cronos have a U.S. listing in the marketplace in Canada. In the U.S. Canopy has grown that. Aurora has prospects of creating that new listing in the U.S. So, these international access that our companies have to these other countries is not only about the global medical process here, but it's also, to Mark's point, about raising capital and being able to have access to the U.S. marketplace. The American companies do not have access to the U.S. capital markets as the Canadian companies do. So Aphria, Cronos as an example, have really gone out of their way to really expand their global footprint to make sure that they're using the capital that they're raising not only in Canada, but in the U.S. to make sure that they build out these operations overseas. And that's creating significant opportunities for companies like Aphria and Aurora, who have access in Germany. Cronos has a platform in Israel and Australia. There are so many different opportunities with respect to these companies specifically. The other big two that we have in Canada here, Canopy Growth, Tweed, the original, also has operations in Germany. They're looking, there's a huge operation in Germany for all of these companies because of some of the things that I mentioned to you, the ability for Germans to be able to expense their use of cannabis from a medical perspective through their government-sponsored health programs. Aurora now owns a company based specifically in Germany, Pedanios, who is an importer-exporter of medical cannabis. And they do that, and that ability for that company to use. So now they're growing operations in Germany, and now they're exporting it out of Germany using the technology that they created in Canada. So again, significant opportunities in the global medical space. Not only all of those things is we have this rumor mill run cannabis industry here, and not a day goes by where there isn't a new rumor of somebody from a big tobacco, big pharma, big alcohol looking at trying to get access to the cannabis industry. They cannot join the cannabis industry from an organic perspective. They haven't gone through the process of getting their licensed producer badge. But what they're doing now is they're looking at how they can potentially use cannabis with respect to the products that they're selling currently on the marketplace, or the fact that they've missed the boat and they want to get access to the potential opportunities of the recreational cannabis sector in Canada. So we see companies like Constellation Brands buying a section of Canopy, and then a year later buying an even more significant growth in Canopy, and then that has expanded Canopy's coffers so that it looks at acquiring a company like Haiku. And then just this week it announced buying a company in Colorado. So it has a significant war chest of cash that it is using to build out its operations, but it is also using to acquire the smaller companies which it thinks can offer an even better competitive advantage to it from a different growing or refinement or distribution process. with the new company that they bought this week, it's all going to be about the biological aspects of extraction with respect to marijuana and how can they improve the extraction process. You have now companies like Aurora who have raised a significant amount of money, whose share capital is allowing them to go out there and buy companies as large as MedReleaf, which was like the fourth largest medical producer in Canada at one stage, and then Aurora just gobbles it up using its own shares, making it the largest medical producer of cannabis in Canada between an operations perspective. But MedReleaf provided some very, very custom types of marijuana to the marketplace. So looking after women from a medical, not just medical, but recreational cannabis space as well. So we're looking at different sales opportunities. So Aurora now just goes out and buys ICC. So Uruguay, where it was the first company where recreational marijuana was approved, ICC has the single largest distribution network there. So we see a company like Aurora expanding their global footprint, and not just through organic growth, but also through acquisition. Aurora also bought Cannabis, earlier this year. Again, another significant operation with respect to growing and the underlying benefits that it provides to Aurora for its ability to grow on not just a Canadian but global scale, significant benefits again. So we see all of these companies, these are all capital markets activities which are very, very positive for the small and mid-cap cannabis companies, because the big guys are looking for people that stand out, people have really significant operations, people have ancillary technology which can help them ultimately grow to become the Coke and the Pepsi of the cannabis industry. We see continued rumor mills out there driving share prices higher almost every single day. Diageo announces that it's looking at the industry. It could look at Aphria, could look at Kronos, could look at Tilray, and then we see these stock prices jump by 10, 20% in a single day just on news that you have a big company like Diageo looking to make an investment into this space. They've been sitting on the sidelines watching all of these cannabis companies eat their lunch with respect to entering the marketplace, and now they're like, what do we need to do? And from a defensive mechanism perspective, they're looking at they're looking at acquisitions to make sure that they have not lost base. This is not too different from the mutual fund industry and the ETF industry in Canada. We've seen all the big players, the banks, the asset managers, sitting on the sideline as the ETF industry has continued to grow hand over fist with the mutual funds, net redemptions, ETFs, net subscriptions. We're going to see that happen with respect to alcohol and tobacco sales on a going forward basis. We believe as cannabis sales becomes, the stigma that used to belong to cannabis has gone away. And, I think that stigma more exists with tobacco now on a going forward basis. Cannabis is more accepted by somebody smoking it on the street than tobacco. So we're going to see that continue to evolve with this marketplace.
We saw Altria as well, just look at Aphria last week, which set that stock up in another round.
Yeah, and when you send one big stock up like Aphria, with Altria looking at this space, you see other companies' ancillary benefits. It's like, oh, well, if they're going to buy Aphria, then, they're probably going to be looking at a little bit of Tilray, they're going to be looking at a little bit of Kronos. There's a waterfall effect that affects the entire cannabis industry with respect to this organic movement of companies that need to get into this space from an acquisition perspective. So we're very, very optimistic with respect to what prospects this industry goes. But the big point here with respect to owning these companies and the potential opportunities is you don't know what's going to happen. You don't know who big pharma, big tobacco, big alcohol, big beverage, how they want to get into this space and how they're going to do that. What type of products are going to be infused with cannabis on a going forward basis as it becomes more and more mainstream. And every single one of these capital markets opportunities really continues to support the entire industry. It shouldn't be all about PE when you're dealing with an industry this young with so many positive prospects on a going forward basis. So do you want to own the company, one company that doesn't get a partnership with one of those companies, or do you want to own an ETF, which is a basket of these companies, which provides you broad, diversified exposure to all of these companies, and you want to gain the benefit, because there's always an ancillary benefit but you might not be capturing all of it when you own 1 or 2 or 3 of these stocks. Going into, I was just touching upon, it's not about all the high valuations, and, notwithstanding that, there's a significant amount of volatility of investing in cannabis sector. The amount of volatility that exists relative to the TSX 60 is very, very significant. We can see huge volatilities here in the underlying individual companies, the Canopy, the Eraphrias, the Auroras, the Cronuses. But when you look at it on an average basis, Horizons Marijuana Life Sciences ETF, HMMJ, really has a much more modified standard deviation of returns over a long period of time. This has really only been around for a year and several months, since April 2017. But you can see from a benefit perspective, we might not capture all of the returns that these individual companies may produce, but we're going to capture the majority of those returns, and we're going to capture it at a lower valuation vol for you to be thinking about as an investor.
Is that the diversification, I guess, working to your benefit, Steve?
Absolutely. So again, that is the benefit of owning an ETF over any one individual names. You're not getting the volatility of returns of any one individual company, which could be a spike and then up and then a spike down very, very quickly for whatever rumor mill is going on out there from a news perspective. And this is an extremely rumor mill news-driven industry. So you can expect huge drawdowns, but huge upswings as well, as we talked about there. So getting into the individual performance, you can look at the 1-year number that we can see. If you are a big holder of Aphria, and I am through the ETF, you participated in a significant amount of returns, but you missed out on the returns of the Canopy, the Aurora, the Cronuses. If you own the ETF, you're getting a much more balanced overall performance of the industry, because you're also not only getting exposure to just the cannabis companies, as we talked about earlier, you're getting exposure to many of the very well-established bricks and mortars companies that are ancillary to this industry, i.e. the Scott's Miracle-Gro, which has significant assets in growing hydroponics and different fertilizers that are going to be very important for the recreational growth process on a going forward basis. But really, here you have significant returns that are happening for the Horizons Marijuana Life Sciences ETF. And look at the since inception numbers on an annualized basis. We beat 3 of the companies there from the start: Canopy, Aphria, Aurora. So only Cronos has slightly outperformed us since day one inception of HMMJ in April 2017.
I think a lot of people forget that after we launched the ETF from sort of June to November of 2017, this market was in a big downswing, but the ETF was holding in much better relative to those names. So we see the rally occurring now, but we probably lose sight of these periods of drawdowns that you highlighted earlier.
Yeah, and the really nice thing about that is, the people that are investing into this space are really sticky investors into our ETF. We have seen very, very little from a redemption side of things. The people that are coming into this money are helping support this industry, helping support the individual companies. It could be an investment purposes strictly for investment, but it could be a lifestyle choice. It could be for whatever reason they want to have access to the cannabis space, or just could be just the news-driven cycle that we are in now. So I told you, I had to deal with my shameless plugs with respect to why we're here today and talking about products. And we talked a little bit about why you want to have access to the marijuana space. But here we are, April 2017, Horizons has launched HMMJ, the world's very first marijuana ETF. Just a little bit about that. We've created our own index with Solactive, a very strong index provider. It's the North American Marijuana Index. We provide exposure to this index for a very low exposure fee of 75 basis points on an annual basis. But we will own a basket of publicly listed North American companies that are in the cannabis space or ancillary to the cannabis marketplace. We track a universe of companies that are in the space, and then we make a quantitative decision to put them into our portfolio based on the liquidity and the market cap of that company. So we're not investing in the very, very early stage penny stocks, but as they grow a little bit, as their volume continues, then they graduate to the HMMJ portfolio. This company owns right now some of the companies that are the biggest name companies that are out there: the Scott's Miracle-Gros, the Tilrays, the Auroras, the Afrias, the Kronos, the Cannabis, the T-Gods. And ancillary to this marketplace, you have companies like GW Pharmaceuticals, which is a very large listed company on NASDAQ, which is really very structured into the cannabinoid space and developing drugs into the marketplace from both a synthetic and an extraction basis to benefit the medical marijuana usage on a worldwide basis. HMMJ's holdings really are broken down between Canada, the UK, which is really GW, and a bit of the US. And the companies that we own that are in the US are not operating in the production, distribution, cultivation marketplace of cannabis. Those are companies that are only ancillary to that market. So that includes the Scott's Miracle-Gro. That includes the companies that are providing the infrastructure behind almost like a REIT organization, which will provide space and facilities with respect to the growing, but they're not actually growing and distributing their own cannabis. So that makes them legal from an exchange listing perspective for our product, and they're not violating any federal Schedule I rules. So we have companies that are listed on the TSX, the CSE, NASDAQ, and the New York Stock Exchange, not to mention the TMX, generally the big board in Canada. So from a sector perspective, we have companies that are really focused on cultivation and retail. Those are primarily the LPs that are out there, but then you have companies that are ancillary, that are creating their own synthetic cannabinoid or cannabinoid extraction processes, the biotechs, and then you have other companies, other ancillary companies, as I mentioned, the Scott's Miracle-Gro, the 22nd Century type companies. Quickly, I'll talk about emerging market, the Emerging Marijuana Growers Index. This is our marijuana juniors. This company only invests in licensed producers. You have to have basically an LP license, whether it be in Canada, the US, or Australia, not to mention any other countries in the world where there's capital market activities in the marijuana space. But this is a more global portfolio, but it is 100% focused on companies that are producing, cultivating, and distributing marijuana. So this company, this fund specifically, does invest in issuers that are carrying on U.S. operations, whereas HMMJ does not invest in companies that are carrying on cultivation and distribution activities. HMJR does. So if you're looking at for very, very specific exposure to the small to mid-cap licensed producers in the marketplace, where we see the potential for acquisition, where we see the potential for significant growth over the bigger guys that are out there, or to be swallowed up by the bigger guys that are out there, HMJR provides a significant amount of opportunities from a small cap marijuana grower's perspective. Just some of the names that we have in there: Can Group, TerraSend, WetMD, American. These are all companies that are very, very that are in our HMMJ portfolio, but we have a significantly higher weighting because of a market cap weighting process in the HMJR portfolio itself. As we talked about, looking at the chart on the right, see 100% access to the cultivation and retail space, whereas on the geographic side, primarily right now we're focused on companies that are listed in Canada only, so that's 93% of the portfolio, even though many of those companies, as we talked about before, are carrying on U.S. operations. But 7% of our portfolio is invested in Australia, where medical cannabis is a little bit behind from a Canadian perspective, but from a climate and operations perspective, we see more and more companies entering the Australian cannabis space. And as I talked about, it really is a potential from a growth opportunity. It has a very, very specific but diversified exposure to this sector. It provides liquid access, whereas some of the companies that we own in the portfolio can be reasonably unliquid from time to time. When you buy the ETF, you're not worried about how much you have to trade and how often you have to trade it. The ETF provides very liquid access to the small cap sector. We have very, very strong exposure to the Canadian marijuana marketplace, but it also provides the flexibility to include more companies that are not just acting in Canada and Australia, but also in the U.S., where we think there's the potential for legalization down the road. The other really significant benefit that you need to understand about owning these products, and why, if you wonder why we're outperforming our underlying indices very significantly from an overall returns perspective, is really because we have the potential to pay you income distributions for owning marijuana companies. There are no marijuana companies out there that are making dividends yet. They're all reinvesting their, the revenues that they're going. Very few of them have reached a point of profitability. That is a thing to come, as things ramp up in the recreational space. But we generate a yield off of the companies that we own in the portfolio from our securities lending activity. So we're making quarterly distributions to you as a unit holder. So you're not only owning your marijuana stocks, getting exposure to the upside potential of the marijuana industry, but you're earning a yield off of owning your marijuana companies. So that we see as a significant benefit to you on a growth perspective. We're paying you to own your marijuana exposure through the ETF. So that being said, I'm going to turn it back over to Mark to give you a little quick summary of what's happening with the space. But I wanted to thank you again very much for listening to me today, and get to ramble on and give you my shameless plugs into why you should be investing in the ETF industry, and specifically the cannabis space. Thank you today.
Thanks, Steve. That was just terrific. I think it gave a really great summary to all of our attendees today to understand, what's going on there, and how to not only, I think was a lot of people surprised, not only how to generate performance, but also how to generate a fairly attractive income owning these ETFs. I think what we've highlighted here is that, the marijuana market is more than the Canadian recreational opportunity. This is a long-term, potentially long-term investment opportunity that has a huge amount of potential from global impact in particular. We highlighted the medical opportunity. At some point in time, the $100 billion gorilla of the U.S. may wake up to this opportunity, and then we could see, exponential growth. And I think these ETFs, as Steve has highlighted, are really well positioned to provide long-term exposure in all of those drivers going forward. And remember, this is the ETF that you're using, and ETFs have some real advantages here. Number one being diversification, but also liquidity and relative low cost to buying all of these stocks individually. So this is something that can trade throughout the day and makes it a one-ticket solution to get into this sector. And really what we're trying to do with these ETFs is provide that sector exposure. And of course, if you want to know more, we'd love to hear from you. You can contact us anytime. Either contact us at info@Horizons ETFs, or you can use our customer service line. We also have a lot of resources available at horizonsetfs.com, which include blogs, updates. So this is obviously a very key area for us and our clients, and we're always trying to create more information out there to make you better investors into this space. So thank you again, Steve, and thank you for everyone for attending. If you have any other questions, as I highlighted, contact us at info@Horizons ETFs today. But I'd also ask you that once you leave today's webinar, you'll receive a survey on the presentation, and we would actually appreciate if you can complete it and provide your feedback. We'd love to hear about how we're doing and where we can make improvements. And you should receive a follow-up email within 28 to 48 hours, again, with the link of the webinar after you watch it. So if you want to hear this again or send it to friends and family, please do so, and hopefully that link will help. On behalf of Horizons ETFs and Steve in particular, thank you for joining us today. Have a great rest of your day.